Welcome back, everyone. Most will miss this. You will not. You will hear right now from me why I bought this stock, why almost nobody gets it. It's in front of us. It's a huge opportunity, solid stock with increasing return on capital employed year over year, increasing free cash flow year over year, and wonderful returns, increasing operating income year over year. And I just shared a bigger article in my CEO brief, which you can find at ceobrief.beehive.com or just on my X profile, Simon Severino. And I want to go with you through this acquisition because I think it can be a winner over the next decade and a very stable one that can survive all kind of markets. So it's around 8% of my portfolio right now, exactly 8% of my portfolio today. It's called BLK, BlackRock. And while most of you have heard about BlackRock, nobody really understands it. Not even asset managers understand it. Let me walk you through the history of BlackRock, why I think BlackRock is poised to win and is unique under every asset manager. This one has some very unique characteristics that you will not find in a second asset manager, and I've been working with many of them. Then how it creates exceptional value for its clients, and the even stronger point for me is how it creates exceptional value for its competitors, because even its number one competitors are using its software. Now, would you use the software of your competitor, which means you are giving them their data, if you didn't have to? No. So two things. First, you have to trust your competitor to actually create kind of a Chinese wall of that data, because otherwise they have your data. So first, you have to trust that competitor a lot. Second, it means that this software is not easy for you to replicate. So you see, from a strategic advantage perspective, how strong the moat of this company is. Let's look at the company. It owns public markets data and meanwhile also private markets data. And you know that our portfolio is focused on firms that own relevant data and have the pricing power to leverage that data. So they are buying also alternative markets data, PE data, private markets data. They bought GIP, so they made very good strategic acquisitions. They earn above 40% in operating margin, and it's increasing. They bought iShares from Barclays at the right point when Barclays was under pressure during the financial crisis. Their biggest moat, I think, is Aladdin, and an additional moat is its distribution. It has the distribution network built over many years. It is capital light, so it can maneuver every kind of market situation. Its free cash flow per share is increasing, operating income is increasing, and ROCE is increasing. So in this article, you can go into the beginnings when Larry Fink was at First Boston, and he was a great trader. He made a great career, and it says, at 31, I became the youngest managing director at First Boston. At 34, I became an asshole. So he blew up that thing. The whole company blew up. And his main lesson was, okay, my next company, which I'm starting immediately, my next company will emphasize risk management. And so this topic of emphasizing risk management is really the core of it. And that's why competitors trust it. And that's why clients need it. So in the article, I break down who are the clients of BlackRock, what is Aladdin. You can read more of it. But if you are on your commute right now or in your workout, let me get to the core points. Aladdin is not just a software. It creates exceptional value for its clients. So first, what makes BlackRock so unique? Why not other asset managers? Well, first of all, it has the largest sum of asset under management, and volume creates scaling effects, create networks effects in this case. Because the more data you have, the more relevant and more precise you can be, and the more people need you. For example, during financial crisis, people actually call BlackRock and say, hey, I don't know how many of my assets are at risk. I don't even know how many of my assets, I'm a pension fund, I don't even know how many of my assets are actually in Lehman. Can you give me the data? And if it's a Sunday, they will get that data on a Monday. This is how relevant this data is and how much they trust BlackRock to deliver that data. Now, an additional point is it makes it really easy to have all that data in one point. So it becomes a single database for all the data for portfolio management, trade execution, analysis data, but also risk management data and investment operations. So you're a pension fund and you want to know, what are my biggest risks? What do I have prepared for? What are scenarios that I have to be ready for? And this is from the BlackRock material on the BlackRock website, shows you exactly how it consolidates data in one place. Now, what does that mean? It means that it creates immense value for the client because they now know what their assets are, where they are, what kind of risks they have, and how can they mitigate those risks. So some clients are pension funds like CalPERS, but also major banks like Deutsche Bank and insurance companies like Prudential. Now, bigger and bigger data sets mean better visibility into systemic risks. So you can do better risk management. We are back at risk management, allowing to create better models. This is a mode that's growing over time as Aladdin reaches more users. Now, if you Google, I don't use Google anymore, I use Perplexity as a search engine, but if you search, how is Aladdin evolving? How much data does Aladdin have? Ask it, is Aladdin becoming the industry standard? And you will see, because I did it, it will say, yes, Aladdin has become the industry standard. And let me give you just one example from Vanguard, who is BlackRock's biggest competitor in the ETF space. Vanguard is using Aladdin for aggregating its own data and managing its own risks. So when your competitor, number one in the ETF market, is giving you their data, they're trusting that you don't misuse their data, so trust. And second, that means that it's not easy for Vanguard to replicate that. And this is what makes them unique. They are the most technical asset manager under all asset managers, because the industry of asset management is really known for not being very technologically driven. It's a culture of relationship and having lunches and creating long-term partnerships over decades. It's not a technology-driven fintech space. So they are the fintech in this old traditional market, and they have the biggest asset under management. Of course, we checked asset under management. They're growing steadily. And now they have to pass our three main metrics, right? The three main metrics are, because otherwise we cannot invest in them according to our system. So let's have a look at the core three metrics. Is their operating income increasing? Yes. Is their free cash flow per share increasing? Yes. Is their return on capital employed increasing? Yes. What's the fair value? I would say it's valued around $170. So right now it's slightly above that. When we bought it, it was slightly below that. BlackRock is something that we own in our portfolio and that we plan to add to if the opportunity arises. If they dip, we will be adding more. Have a great week, everyone. Keep rolling.